All right. Good morning, everyone. So it is 11:25 in the morning on March 19th, 2021, and I am doing a $536 Green Day recap. Very nice. All right. Um, so I'll just get started here with my trades. So for MP, AMRS, and ENPH, I had orders set to go, and I usually don't do that. It's just in the past, I don't know, month, I've missed out on a lot of opportunities because I haven't had my orders ready to go. And by the time I go to click in, by the time the stock hits my price and I move over to it and so on, I miss my price. So this morning I went ahead and put them on pre-market. I didn't put the positions on pre-market. I put the orders in pre-market for the opening. And I got filled at the open here quite a bit. Let's see. You can see here on MP 9:30 and 30 seconds. And there's something a little bit strange here. So I got filled on these 200 shares. You can see I staggered 300 shares around my target price of MP at the time, which was 42.39, and actually I got filled at the open. And I'll explain. Usually I wouldn't do that. Usually, if a stock price opens below my number and I'm bullish on it, I'll cancel out of the programmed in quote trade. But on MP, I've traded MP several times, and I've gotten quite a few successful trades out of it. So I was willing to leave that one on this morning. ENPH and then AMRS came into my numbers. I'll go over that in a minute. So anyway, you can see. Let's see. I think I was in these trades for all of like maybe 5 minutes this morning. But I don't know why it's telling me at 9:31 and 3 seconds I got filled on 100 shares at $41. It just doesn't make sense. I just don't know why it's doing that. I don't know why it's saying that. So anyway, yeah, and then I let them all go at 9:34 and 40 seconds. So just about 4 minutes, 4 minutes of the trade. They're managed to pull down about $300. Let's see. MP here, 169.49, and then 142.45. So just north of $300 on that trade in 4 minutes. Not bad. Then ENPH came in my number within the first minute. It says here I got filled at 9:30 and 54 seconds. I was out of that one just a few seconds before I was out of MP. I only got filled on ENPH. Only got filled for 20 shares. Made $3 per share on it, so it was good for $65. A little bit more than $3 per share and $20. But I only got filled on 20 shares. I had 60 shares staggered on this one, and so this is also kind of strange. Is that and I'll show you on the chart. I had 20 cent difference between each entry for 20 shares each, and my entry was on ENPH. You can see right here, this is the 1 minute chart. You can see right here in the morning, right, it went down to as low, my entry is 151.36, and the low here says 151.30. So I had an order in at 151.36, and then 151.56, and then another one in at 151.16. And for whatever reason, and I don't know why, I only got filled on the 20 shares that was at 151.36. I don't know. I really can't make sense of that one. I have to call my brokerage and see what's up with that. And then AMRS. So I staggered 300 shares on AMRS at, I think it was roughly 20 cents. So I had an order in for 1978, 1958, and then 1938 on 300 shares. Now, I got filled on my first 100 shares in the first minute, and it started to pull away. And so I canceled the 1958 and the 1938 orders, which would have been a good idea for me to have left them on. I would have gotten, in 300 share position instead of a 100 share position on AMRS, and gotten out with, let's see, AMRS here. I made 40 cents on the 100 shares that I got in at 1970. Let's see, 1970. At 1958 was, 1978 is where I had an order, but I got filled at the open at right there at 1970. I got filled right at the open. I had an order in for 1978, so I was like, okay, and it ran up, and I think that's why I canceled. I was like, okay, well, so I was anticipating this thing running up past 2031 here. This is another level that I had coming back up, testing and moving away again, and that's why I canceled the other 200 shares. I didn't want them lingering. I've made the mistake before of leaving an order on the market and forgetting about it, and then coming back and be like, oh wait, how did I get filled on this? And so anyway, that's so to kind of go from the top here. I was in at the open at $41 per share on MP. Usually I would have canceled out that order, but I'm bullish MP, and I was willing to let the open. I was willing to get filled at the open wherever that was, and it was at 41. And then 4 minutes later here, it hit the 42.39 number, which would act as resistance at this point, and started to pull back. And so I let it go at 42.04 after it pulled back from this this resistance point here. And yeah, I let it go basically at the top of this candle right here. ENPH, a $3 trade here, really nice. Good entry, good exit. You can see I've got on these realized gains over here on the left-hand column here, a 2% gain, 2.15% gain, 2.54% gain. And if I continue to let my gains run over 2% and cut my losses at 1%, and I'm right 50% of the time, that gives me a 1.5 to 1 win ratio. So AMRS, I could have not canceled those other orders that I had and gotten filled at a lower price, but I didn't know that was going to happen. FedEx came pretty close. I had a level of 275, and I staggered, I think it was 100 shares between 275 and 274. It came close and then moved away, and so I canceled out of that trade. And it came back again later in the morning, but I have after 10:30, I really don't like to place trades. I'll do it, from time to time. I'll make trades after 10:30, but for the most part, I like to just be done for the most part. If I'm still in a trade at 10:30, it's a trade that I've initiated in the morning hour, the first hour, and then I took profits, and I'm letting the rest see how far it can go. Small cap momentum has just so my first year of full-time trading, I was almost exclusively a small cap momentum trader, and it was easy. So far, actually, my first year of being a full-time trader has been my best year. I cleared well into the six figures in my first year, which is unusual for a first year trader. Now, I wasn't really a first year trader at that point in time. I've been trading on and off since 2006. And so I had, this system and so forth for small caps that worked. Let's see, I started in early 2019, and it worked all the way up until mid 2020. And then just all of a sudden, it seems like small cap momentum is just doing the same thing. It runs up in the morning, the pre-market, it comes down in the pre-market. It might get a run up in the opening hours, but then it just dumps. Small cap momentum, SNES was the leading gapper this morning on the small cap momentum scanner, and SPCB was the next one after that. And you can see here, just neither one of them have given any entries. They're just not trading well. Small cap momentum just is not getting any kind of a bid. It's just not working. So, if something's hitting the scanner, I might pay attention to it if I'm not doing something else at the time. And there are things that have been hitting the scanner, and actually there are a couple of things. There's one thing here, MOGO, that I actually invested in for a while. I'll pull it up here. There are some good companies from time to time. When you get a small cap like this one, MOGO, this is some kind of electronic payment system. It's still losing money. Revenues are in the right direction, and earnings per share is in the right direction, but it's still negative. Mogo operates a financial technology company. It provides a financial health app that empowers consumers with simple solutions to help them manage and control their finances. Through its app, the firm provides free credit score monitoring, identity fraud protection, digital spending account with platinum prepaid Visa card, and digital mortgage experience. Its Mogo crypto account enables users to buy and sell bitcoins and access to smart consumer credit products through Mogo Money. The company was founded on January 14th, 1972, and it's headquartered in Vancouver, Canada. So this is one that I traded. I traded this a while back, and I invested in this one I did a swing trade in this one, and I was in it cheap. I think I was in it for just over $1 or so a share or something, and then it popped up, one day, and I was like, yeah, I'm taking my profits. But I did some research into this thing. It's a good company, but I'm not. Now that it's up here at 1192, and it is breaking, actually it's breaking new all-time highs today. That's a good sign. Well, anyway, so then I also traded the SPY. Let me bring down the SPY here. So this is actually the S&P. You can see here there's this nice little head and shoulders. It was really, on the 1 minute. There's a 1 minute head and shoulders pattern happening here with the neckline right here. So I bought on the 1 minute time basis here. It broke the neckline here, then confirmed it here, and I started buying options. I bought, actually my first trade, I should say. Let's go back. So Hedgeye had a risk range today on the S&P of 3878. And this isn't something I'm going to share publicly, because I think I could get in trouble for it, for starters, for sharing their risk ranges. And also, I pay for it. If you want, their risk ranges, you got to pay for it, basically. So on when it started coming down close on this down move right here, on this big down candle, I was like, okay, it's going to start coming into the low end of the risk range. It's coming into the low end of the risk range. There was a low here of 3,889, and the bottom end of the risk range was 3,878. And so I was basically 10 S&P points, or $1 away on the SPY from the very bottom end of the risk range. And usually it doesn't hit the bottom end of the risk range. And actually, it looks like there's another entry right here on the S&P for another trade getting cranked up. Actually, now that I look, now that I'm doing this, so I bought five. Let's look at the time exactly. Well, let's hope it's close to the time. It's hard to trust my brokerage's timestamps. So we'll go. Oh, I used to have the 30-second, and I don't know what's going on with TradingView. It's a little bit frustrating. I had, as of like 2 or 3 days ago, I had down to the 1 second and 5 second. I don't know. I haven't done anything to my account. I just don't know. Anyway, let's see. So, I didn't expand. It looked 950 something. I could look over. I'm right next to my trading machine. So the first entry was at 950 and 18 seconds, according to my brokerage. So 950 and 18 seconds. So right in here, in this first kind of move down right here, I got in at a great spot. I got in on this candle, and then made this move up from 387.59 to 388.90. So there's a dollar move, and that was worth about $50. It was almost $60 of profit. And then I got in again at, look, on the SPY at 10:47 and 9 seconds. So 10:47 and 9 seconds. Oh yeah, that's where it started to break the neckline. Let's go back to the SPY, the S&P here. So I was using the S&P to time my SPY entry. So let's take a look at 10:47 real quick. 10:47. Okay, so yeah, so I got in right here at roughly 389.18, and it ran up to the neckline. Let's see. Let me go back to the 1 minute. 10:47. So right in here, there it is. Yeah. So it broke above the neckline, came down beneath it to test it, and at 10:47.09, I guess right here when it started to creep back up above the neckline again is where I put on another 5 contracts of the SPY. Strike was 390. Expiration was next Friday, a week from today. And so I caught this move on the S&P from 3,907 up to 3,914 roughly, but on the proxy, on the SPY, not on the S&P itself, but on the SPY. So I caught this move from 389 to 389, roughly we'll call it 23, and I let it go at 389.92. And this is a red to green move. So this is the open. So 389.89 is the open. And so I bought it here, and I was like, okay, well, it's really close to the open. Let me see if this thing can do a red to green move and hold it. And then it couldn't hold it. And so once it pulled back and then started coming back up again, I let it go when it got to the 389.90 area again. And that was worth it was another 12 cents. So, and then I took another trade on MP, but I didn't hold on to it. I got out of it. Right, where was it? Okay, so right here, I had a level this morning at 42.39. This line wasn't there. That's just an intraday high. And I got into it late at like 42.97, right? I was like, I was thinking what I would usually do is wait for the test, which it did. It came up, broke this level, came down, tested it, and moved away again. Uh, but I wanted to be in for the momentum trade. And it hit 42, it hit a high here of 43.25. I was in at 42.96 is what it was. And it moved up, stopped moving up, came down, moved up again, bobbled around. And so I held on to that trade I was in at 10:22 and 20 seconds, and I was out at 10:28 and 43 seconds. So I was in on, let's see, 10:22. Yeah, I was in on this candle right here. Not a good entry. I was expecting it to run up to 44.60 here, which is a pre-market high. It didn't do it. It started to consolidate, and it wasn't showing strength on the level 2. And so I got out of it at like 42. I got out of it at 42.97. I was in at 42.96 and got out of it at 42.97, and was happy to be out of it. I didn't want to stick around for this test of 42.39 because that was where I should have been entering it. That's where my entry should have been, and at the time I was like, okay, it was really right in these two that it was showing good volume here, and then it just died off. And then it started to sell off. So, I kind of call that's a scratch trade. That's a break-even, trade. So, $536. I'm happy with it. I think it's time for me to start taking some more share size. There's next week. So, okay, everyone. Good luck out there, and manage your risk. Click like, share, subscribe, leave a comment, and I will see you on Monday morning. All right, everybody. I'm out. Have a good weekend.